The trade war is back, and it's hotter than ever. China hits back first and talks later. China has unleashed a barrage of retaliatory measures against the United States. This latest escalation comes after the US imposed a hefty 34% tariff on Chinese goods on top of an earlier 20% imposed in February and March, making total tariffs on Chinese goods at 54% under Trump 2.0. There were already 20% tariffs on various Chinese consumer and industrial goods imposed under Trump 1.0, and also the Biden admin between 2018 and 2024. China, refusing to back down, has responded with a vengeance. The global financial market is now worried about escalating trade war tensions and synchronized global recession. Oil and industrial metals have slumped. Besides slapping reciprocal retaliatory tariffs of 34% on U.S. goods, China also hit the U.S. with export restrictions of various crucial rare earth materials, without which it would be very difficult for the U.S. to maintain its tech and military supremacy in the long run. As an additional measure, China also added 11 American firms to its unreliable entity list, restricting their ability to operate in China. Export controls were imposed on 16 U.S. companies to limit the shipment of dual-use items, including drone manufacturers. This tit-for-tat exchange has sent shockwaves through the global economy. The world's second-largest economy, China is also the second biggest market for various big U.S. MNCs, and any Chinese restrictions on them is also negative for their earnings and Wall Street overall. Businesses are on edge, investors are panicking, and the average consumer is left wondering what's next. Dow Jones, seen as the bellwether for the U.S. and global stock market, capitulated by more than 5,000 points in a few days after Trump celebrated his Tariff Liberation Day on April 2nd and imposed draconian reciprocal tariffs from 50% to 10% on almost 180 countries in the world, including China. At face value of Trump's present reciprocal tariffs plan, Americans may have to pay 25% additional tax or import duties on around $3 trillion worth of imported goods annually. This will inevitably push up the cost of living for average Americans and may cause stagflation or even an all-out recession in the coming days. The U.S. presently imports almost 50% of consumer and industrial goods, including goods for daily use. China's retaliation is a multi-pronged attack, targeting key sectors of the U.S. economy. First up, they've matched the U.S. tariff for tariff, imposing a 34% levy on all U.S. imports. That's right. Everything from U.S. soybeans to smartphones has just become a whole lot more expensive in China. But wait, there's more. China is also playing hardball with its global dominance in rare earth materials, which are essential for modern life and military hardware. These are essential components for high-tech industries, and guess who controls the lion's share of global production? You got it, China. They've slapped export controls on these critical resources, putting U.S. tech companies in a tight spot. And as if that wasn't enough, China has also suspended agricultural imports from the U.S. That's bad news for American farmers who rely on China as a major market for their products. China targeted rural America, which is a very big vote bank for any political party, including Trump's Republican Party. To top it all off, China has blacklisted several U.S. companies, effectively barring them from doing business in the country. As you can imagine, this trade war escalation has sent global markets into a tailspin. The Dow Jones Industrial Average plunged over 5,000 points in a matter of days, well into correction territory of over 10% fall from the top, while the S&P 500 corrected over 15% and Nasdaq 20% into bear market territory, at least technically. European and Asian markets followed suit, with investors around the world hitting the panic button. Oil prices have tumbled as fears of a global recession have risen amid a scalding trade war between the two largest economies in the world, controlling almost 50% of global economic output or GDP. Industrial metals like Dr. Copper, seen as a barometer of economic health, have also taken a nosedive. Even gold, traditionally a safe haven asset, has lost its luster as investors seek liquidity. Cash is king. The message is clear. This trade war is bad news for everyone. The International Monetary Fund has warned that the tariffs could shave off 0.5% of global GDP growth. That's a significant hit to the world economy, and the situation could deteriorate further if the trade war drags on. So what's next? That's the million-dollar question, and unfortunately, there are no easy answers. The US and China seem to be locked in a game of chicken, with neither side willing to back down. President Trump, true to form, has remained defiant, tweeting about great job numbers and urging the Federal Reserve to cut interest rates to help him win the trade war he launched, which has created panic both in Wall Street as well as Main Street. Even various prominent Republican leaders are now openly voicing their concern about President Trump's trade and tariff policy. Although Trump's thought process about the legacy issue of the U.S. tariff disadvantage may be correct, his implementation strategy may not be correct. The Fed, led by the ever-cautious Jerome Powell, has signaled its concern about the economic fallout from the trade war. On Friday, April 4th, Fed Chair Powell sounded more hawkish than in his March 19th Fed presser talks. Powell is now warning about potential stagflation in the U.S., more persistent inflation, and significantly higher cost of living after seeing Trump's Liberation Day reciprocal tariffs. Federal Reserve is likely to maintain a wait-and-watch approach, closely monitoring Trump's policy action in trade, tariffs, immigration, fiscal policies, and regulations before making any policy moves, as all these Trump policy uncertainties may affect Fed's dual mandate of minimum price stability and maximum employment. Eventually, the Fed will take policy action based on economic data and its outlook, not Trump's tweets or truths. Meanwhile, businesses and consumers are left to navigate this uncertain terrain. The trade war has already disrupted supply chains, increased costs, and dampened consumer confidence. The longer it drags on, the greater the damage to the global economy. The hope is that cooler heads will prevail and the US and China will return to the negotiating table. Trump is already sounding soft and may blink first. There may be reconciliations rather than protracted confrontations. Most of the major US trading partners, including China, EU, and Japan, may also show flexibility to avoid an all-out trade war with the US. After the Wall Street meltdown, Trump may be also blinking as he is offering trade war truce with China by postponing TikTok deal deadline by another 75 days. Trump is open to offer trade concessions to China in lieu of helping TikTok deal. But China is not ready to engage in childish negotiations. China wants serious trade negotiations with equal footing and mutual respect. Trump may be seeking a universal tariff like 10% and an appropriate VAT or GST rate across the globe for a level playing field irrespective of the WTO narrative of developed or developing nations. Trump also wants free and fair trade across the globe without any targeted regulatory hurdles. But most of the developing and even some developed nations and US allies are not so liberal and ready to give the US free and fair trade access. Thus, Trump is now trying to pressure those countries through his bellicose tariff policies. Although these Trump tariffs will eventually be borne by US importers and consumers, and not exporters, they are wary of losing the easy access to the $6 trillion goods consumption market in the US, which is a huge blow to them. Trump is now trying to use the huge US consumption market as leverage for free and fair US access in the global trade. High-tariff countries like India and Vietnam are in touch with the Trump administration for a middle ground. The question is now, who will blink first? US President Trump or Chinese President Xi?